Prestar Resources Berhad was founded by two brothers, Datuk 𝗏 𝗪𝗪𝗋 and Mr. 𝗏 𝗪𝐾𝐃 in 1984. The company is in the steel industry where they act as an investment holding company, while their subsidiary and associate companies mainly engage in the steel processing and steel products manufacturing activities. The only country they sell to is Malaysia. For more information, you can visit their website at www.prestar.com.my. A sloppy and dropping revenue and gross profit overall. Interestingly, their gross profit rose 68% even though revenue dropped 10% in financial year 2020. This may suggest Prestar had managed their cost of sales pretty well during that year. Choppy operating profit as a result of the unstable gross profit explained in the previous slide. The times where operating profit dropped is due to the lower margin on sales as a result of the unfavorable steel price. Growing profit margins initially, however they fell after financial year 2017 in line with higher costs of material and weaker market demand for their product. Fortunately, margins were improving after financial year 2019. Unstable ROIC, they were rising smoothly initially but fell after financial year 2017 in line with lesser profit generated. The bumpy ROIC can be justified from their net profits growth over the years. Meanwhile, the directors' remuneration has been rising significantly, which caused their remuneration to PAT ratio to juggle around 30 to 40%. Prestar has been a net debt company for 10 years. On the bright side, total debts are dropping gradually. Very unstable operating cash flow as a result of the occasional increase in working capital. Negative capex in financial year 2017 as they disposed their subsidiary in Vietnam. The company paid dividends for 10 years, plus they are growing. However, the amount reduced after financial year 2017. Negative free cash flow incurred in those stated years as a result of the large drop in operating cash flow. Prestar was able to distribute dividends in financial year 2012 and 18 as they have ample of cash reserve. All in all, I rate their company 3.8 out of 8, which is about 47.5%. After analyzing Prestar's 10 years of financial data, here are my thoughts. Number 1, the company is in a very volatile and competitive industry as their business is heavily associated with steel. Similar case to 𝗏𝗏 Berhad. If you have not watched my analysis on 𝗏𝗏, you can click the I button at the upper right hand corner of this video. Nonetheless, based on their profit margins growth, it appears that they are able to control their costs relatively well as opposed to 𝗏𝗏. Besides that, the collaboration between one of their wholly owned subsidiary, Prestar Storage System, and Murata, a Japanese manufacturer of electronic components, will bring growth opportunity to the company as the collaboration allows them to tap on Murata's global market, including the USA, Japan, China, and ASEAN countries. Not to mention, Prestar will be able to gain instant accessibility in supplying their products to many exciting industries. To name a few, e-commerce, pharmaceutical, logistics, and even high-throughput industries like fast-moving consumer goods. Having said that, the partnership with Murata would definitely augur well the long-term strategic business goal of Prestar. Lastly, the company had leveraged a lot of short-term debt to finance their business. Based on the data I've collected, more than 90% of the total debts are short-term. I noticed most steel companies love to take on more short-term debt than long-term. So I did some research and found out that short-term financing are indeed suitable for companies that have fluctuations in working capital and other ongoing operational expenses, as such financing provides shorter maturities than long-term financing. Having said that, it makes sense for Prestar, 𝗏𝗏, or basically whichever companies that have unstable working capital to leverage more on short-term debt as they are used to finance their everyday operational needs. That's all for today's video. If you enjoyed the analysis, make sure you smash the like and subscribe button. If you have any questions, feel free to comment down below. I'll be happy to get back to you. With that, I'll see you in the next one.